Hey everybody, welcome to the channel. Hope you guys are having a chill day. In this video, I'm going to cover a few DeFi protocols on Harmony. Not only am I going to cover existing protocols, but I'll also show you guys a couple new players to look out for. I'm not sure if you guys are aware or if you guys heard of, but there was this kid that deposited $3,000 into one of the pools on DeFi Kingdoms very early, and he recently sold his locked jewel that's worth approximately $10 million for $1 million. And that got me thinking, maybe this is the new investing paradigm for early stage investors. So in addition to expanding on that view, I'll also cover a project in pool where I think early participants could capture significant gains. Now with that being said, I'd like to take some of your time and shill a project that I'm currently working on. It's an NFT project, except this project is going to come with utility. At a minimum, you're going to get a lot of alpha by interacting with GameFi and DeFi specialists, many of whom have a track record of producing very killer results in their personal portfolios. But in addition to that, we're going to use the lion's share of the capital that we raised through the mint to pursue yield farming opportunities across the various DeFi protocols. We're going to take that revenue that we generate and we're going to purchase GameFi assets, metaverse assets, and the focus is going to be assets that are productive. And at some point, the goal is to take all these streams of passive revenue and redirect a portion of them to NFT holders. If that resonates with you, make sure you guys join the Discord and give us a follow on Twitter by clicking the links in the description below. And if you wanted to get to know me and some of the team members a little bit better, or holding a poker tournament tomorrow night, the details can be found in the announcement channel in the Discord. Now with that plug out of the way, let's go ahead and dive into this video. Alright, the first platform we're going to cover is DeFi Kingdoms. If you guys haven't watched one of my past videos on DeFi Kingdoms where I discuss a passive strategy, which is ideal for individuals who don't have time to play the game and keep up with the developments and the updates, you can find the link to that video in the description below. Anyhow, if you're bullish on DeFi Kingdoms or you're looking to get some exposure and make some passive income at the same time, the pools here are not a bad place to start. Because the game has done such a good job of absorbing the inflation created by these pools, we've seen the Jewel token produce really good returns. And so if you're thinking about providing liquidity, you definitely need to be a Jewel bull, because to get the lucrative yields, you'll have to get exposure to Jewel, plus the yield is paid out in Jewel tokens. So what you could do is provide liquidity to the pair that has your favorite layer 1 asset or layer 1 asset that you're most bullish on. They support BNB, Matic, AVEX, Ethereum, Luna, FTM. And for me, I originally was very bullish on Luna and FTM. In fact, I took the Luna that I had on Anchor Protocol, converted half of it to Jewel, and provided liquidity here for a brief period. But recently, I shifted a lot of my liquidity over to this pool here, because out of all the layer 1s they support, in my opinion, I think one has the most upside. Currently, we're seeing a lot of GameFi projects launch on Harmony, and I think that has a lot to do with DeFi Kingdom success. This model of creating a core DeFi primitive and then layering a game over it is starting to gain a lot of traction, specifically on the Harmony chain. Because if you think about it, a lot of the other projects, when they distribute their token via yield farming, aside from speculation, there isn't really strong demand or a use case for the token. But if you layer a game on top of it with its own internal economy, then instead of just farming and dumping tokens, the token becomes more desirable because you needed to purchase in-game items and assets. And I think that model, especially on Harmony, is going to be emulated by other projects. So as these other projects and platforms go live, I expect to see a lot of user activity. And anytime somebody onboards, they'll have to get exposure to the one token. And anytime a transaction is conducted, people have to pay in the one token as well. Also, if people want exposure to Jewel, given that the Jewel/one pool is one of the more liquid pools, I can see a lot of orders going through it. And it's only going to get better for liquidity providers when there's a DEX aggregator, because DEX aggregators are designed to give people the best price with the lowest amount of slippage. So if Jewel 1 is one of the most liquid pools out there, it's going to get a lot of orders routed to it. So because I think the price of one token is going to go up a lot relative to the other layer 1s, and I think a lot of orders are going to be routed through this Jewel/one pool, I decided to shift half the liquidity I had into Luna and Phantom pool to the one pool. And if you're new to DeFi Kingdom, just know that a little bit over 1/3 of the yield that you make will be redeemable right away. The remainder of your yield that's locked won't be accessible until Q3 of 2022, and even then it's going to be vested linearly. And if you guys keep watching this video, there's another game that's launching soon that I think has the potential to produce really good returns, provided that we don't go into a bear market in the coming months. Now, the next protocol that I want to cover is Tranquil Finance. This is a money market protocol. So in other words, it's like an Aave. They have a supply market and a borrow market. When I first saw this protocol, because the reward yield was so high, you were actually getting paid to borrow. And you kind of still are with some of the assets like Staked One. In this case, the market rate to borrow is 7.8%, but the yield that you're getting in return for taking out the loan is 9.69%. So in other words, you're making roughly 2% for borrowing against your assets. And like I mentioned in the previous segment of the video, a lot of projects out there, especially core DeFi primitives, are looking to emulate the success of DeFi Kingdoms by launching their own games on their platforms. And after Tranquil's announcement for their 2022 roadmap, the price of their token went up over 6x. And since then, the price has held pretty good. And I think it has to do with the fact that if you want to be in the lottery to potentially earn a Gen 0 hero, you have to stake your Trank tokens in this pool here. And when you stake your tokens here, they're going to be locked for 6 months. If you withdraw early, you're going to be charged with a 50% penalty. Or you could come down here to this pool where I provided liquidity. You won't be eligible for the lottery. You'll get less rewards and 0 protocol fees, but you can withdraw at any time. Another option would be to provide liquidity to this pool here. By doing so, you'll get an APR of 166%. And in the event that they take a long time to deliver on their roadmap or the game turns out to be a flop, at least you'll be hedged by having exposure to the one token. And even though it's purely out of speculation, the fact that their token is now in an uptrend, they're going to be able to incentivize users to go ahead and borrow and supply more assets. And as their TVL grows in terms of total supply to total borrowed, they're going to be able to generate even more protocol fees. And as a result, you could potentially see a positive reflexive loop develop. Now that the token has appreciated, and let's say it continues to do so because people are encouraged to play the game and spend their Trank tokens within the game buying in-game assets, the reward yield on both the borrow and the supply side are going to go up. That's going to attract more people to supply assets and borrow assets. And instead of just farming and dumping those tokens, many may be encouraged to play the game and spend the tokens inside the game, assuming the in-game economy allows people to create and extract value, causing the demand for the Trank token to further surge because more users and players are playing the game, which again results in the reward APYs going up for both the borrow and supply side. But the problem with this model is that unlike DeFi Kingdoms, where if you want to earn the robust yield, you have to get exposure to the jewel token, that's not the case here with Tranquil. I think they could potentially remedy that by only offering the reward yield to individuals who buy and stake the Trank token. But as it stands, I think that could be a potential problem. Also, the people that are earning this yield, unlike DeFi Kingdoms, where the earned yield, a portion of it gets locked, here all the rewards that you're earning are going to be redeemable right away, which should be a problem if there's enough demand inside the game, but becomes somewhat problematic if the game isn't successful as they expect it to be. Now, outside of everything else that I mentioned, I think as it stands, it's a pretty good protocol. It's definitely one of the core DeFi services that should be available on all chains. And what's nice here is that you can actually delegate your one and get a liquid staked version of it, otherwise referred to as a liquid staking token. And so by getting your liquid staking token, you'll continue to earn yield from the one that you delegated to the validator, but you could also sell it and exchange it and use it on the money market protocol here on Tranquil Finance. And if the reward yields in the future do end up increasing, you could actually get risk-free exposure to the Trank token. For example, you could supply your staked one here on the supply side and go ahead and borrow one of these assets that provides you the biggest reward yield, where you're netting profits. And at a fixed interval, you can sell Trank tokens that you earn to cover the cost of the loan and stake the rest on this page here. The net benefit is that since you're borrowing against your staked one tokens, you're going to be earning regular staking rewards. And on top of that, you're going to be getting free Trank token. Moving along, the next protocol that we're going to cover is Unite Finance. This is basically a tomb fork with a few nuances. And this is actually one of my favorite tomb forks out there. I mean, they're very engaged with their community. They make regular announcements. And when it comes to changing parameters, or for example, adding a Jewel Unite pool, they allow the community to be a part of the thought process or the decision-making process. And together they give it deep thought prior to deciding to go ahead and move forward with the decision. And out of all the Tomb forks that I follow, it's probably one of the larger communities. And as a result, you have a lot of engagement throughout the Discord. The UI looks nice and fresh, very easy to navigate, and they have a lot of useful resources that they provide. And it's not something that they set up overnight. You can see that they've given the protocol very deep thought. They have documentation that helps informs users about what strategies to use. And they're even using their resources to help support the network by setting up a validator node. And in hopes of bringing more utility to the UShare token, they're also thinking about starting a launchpad. And all of that's important for them to be successful because number one, you definitely need a core team that executes, that's committed to the long-term success of the protocol, but also you need an engaged community to complement that. And by providing educational content like they've done, they keep the community informed about the best practices, and simultaneously they let the community know that they're committed to this protocol long-term. So if you have an informed community that has faith that this model will work, then they have a pretty good shot at making this work. Personally, I think Tomb forks make sense, especially for proof of stake layer 1s. Since the token is needed to secure the network, it's nice to have a logarithmically pegged token. This way there's sufficient liquidity within the ecosystem. It doesn't necessarily have to be a zero-sum game where there's only one successful Tomb fork per chain, but the first movers are going to have the biggest advantage. And to my knowledge, Unite Finance is the first Tomb fork on Harmony. And now that the Unite token is approaching peg, I mean, when I first started, it was worth roughly $3, which was like 10x above the peg. And so at that time, buying U shares made a lot of sense. But my entry wasn't the best. I entered around here, and even though the yield that I've been getting has offset some of my losses, I'm still sitting on a net loss. So when it comes to these protocols, you have to either time your entry or you have to have enough faith in the team and the project to establish a long-term position regardless of the price. Now, out of all the protocols and projects that I'm going to be covering today, this is one of the most riskiest protocols you guys can get involved in. But because you're taking on such a tremendous amount of risk, the potential gains that you could realize are going to be astronomical. I mean, assuming that they become successful long-term, imagine buying UShare tokens for a couple $1,000s and earning, let's say, an APR roughly of 15 to 1800% for a few months. And during that same time frame, not only do you earn a fat APR, but the value of the UShare token goes up to, let's say, 20, 30, 40,000. Now, the purpose of this video is just to introduce the protocol. If you guys want to learn more about the mechanics, I can definitely cover that in a subsequent video. Just make sure to let me know that you're interested in the description below. Moving along, we have CheezDao. The best way to describe this is a gamified version of Olympus. It's going to take me too long to go over the in-game mechanics. You could definitely look that up yourself. They have a Medium post, which I'll link in the description below. Or you can go ahead and click here on docs where they explain exactly how the in-game mechanics work. But what really attracted me was the bonds here. If you look at the top, they actually allow you to purchase bonds using your locked Jewel tokens. And if in theory the price stabilizes and there's sufficient liquidity for the Cheez token someday, what you could do is purchase these discounted tokens via these bonds. And after 5 days, you'll be given Cheez tokens, which you could then proceed to sell on the market and buy Jewel. And the net result there is that you're basically converting your locked Jewel to unlocked Jewel. Now, during that time, the price of Cheez could potentially go down. But remember, you're getting it at a discounted price because you're purchasing the bond. And even if the price goes down below, let's say, your bond purchase price, and you end up getting, let's say, 70% or 80% of your locked Jewel, that's still pretty goddamn good compared to waiting, Q3 of 2022. What I haven't done, but I need to do at some point, is go into the Discord and gauge the quality of the team based on how fast they ship and how responsive they are to the community. And on top of that, I may end up having one of my buddies who works for Olympus looking under the hood. This way we can get more insights on the devs that they have on the team. And if everything checks out, I may get more involved with this protocol at some point. But for now, I would at least recommend giving them a follow on Twitter or figuring out a way to keep them on your radar. Once the price stabilizes, you could also just buy Cheez and stake it for this APY here, because the current market cap and the treasury indicate to me that this is a very new protocol and we're in the very early innings. And generally speaking, I was getting a little bit tired of these Olympus forks, but I kind of like the innovation that's happening here, the nuances. So at a minimum, I'm going to be keeping this on my radar. Next up, we have another own fork called Euphoria. Their token ticker is WAGMI. And since their launch, their token price has been down only, but to be fair, the same thing happened to the OHM token post-launch. You had a lot of people get the token for $4, so after it went to like a couple $100s, many people sold, and it took a while for them to regain momentum and go up only. But unlike Olympus, they do have competition, so unless they do something more nuanced or innovative, I don't really see them gaining a lot of traction. But I would encourage you guys to do your own research because I haven't done a deep dive. I'm just giving you guys a surface level overview. And if you guys disagree with my outlook at all, make sure you guys express that in the comment section below. Let me know why you guys think I'm wrong. But what they have going for them is their treasury balance. You can see that it's $41 million. If you look at the current market price here of $96, you can see that we're pretty close to reaching parity. Once we see a floor forming here, it may end up being a pretty good entry for new investors. Next up, we have FarmersOnly. When they launched, they mostly just had auto-compounding vaults, but recently they've made a shift and they've added FoxSwap, which is a decentralized exchange, and they've added additional farms. If you do end up using this protocol for the vaults, make sure you take a look at the vault fees here and maybe compare it to BlockFi Finance. Because even though they don't charge any deposit fees, when you withdraw, you're gonna have to pay 0.2%, and you're gonna have to pay an ongoing fee of 4% on all the yield that you end up accruing. Unlike other platform or governance tokens, if you go ahead and stake their governance token, you're gonna have about a third of the DEX fees that they generate directed to Fox holders. Where they distinguish themselves is through this auto-compounding vault. Instead of collecting Fox similar to other protocols, it deposits the Fox into the yield farm to earn additional Fox for XFox holders, which makes it the first DEX fee sharing plus auto-compounding yield farm token. Now, with all of that being said, let's say you do your deep dive and you're not into the platform and you don't want to place a long-term bet by getting exposure to the Fox token, you can still benefit by providing yield to one of these pools here. What got my attention was this pool here. It has about $3 million worth of liquidity and it's offering an APY of 25%. Anytime you see a decent amount of liquidity and you see an APY like this, it's definitely worth taking consideration into, especially with this pool, which auto compounds your yield. The only problem that I would have is the fact that they're relatively new, they don't have much TVL, and I haven't developed enough trust and faith in the platform to deposit a large amount of my stablecoins with them. Nonetheless, I think it's a protocol worth bookmarking. This way, whenever they launch a new pool or a yield opportunity, you'll be the first to learn about it. Moving along, we have LootSwap next. The reason I was attracted to this platform was because they had pool for the Magic token, which is the governance token for Cosmic Universe, a game being built on Harmony. Initially, I got exposure around here because it was mostly a proximity play. I figured people who feel like they're late to DeFi kingdoms will also look for these proximity plays in hopes of capturing DeFi kingdom-like gains. So I actually took about a third of my Magic tokens and I stuck it in this pool here. During that time, the yield was over 1,000%. And even after reducing the emissions, the yield currently sits at 471%. And with the token price having tripled in the last few days because people are getting ready for the land sale, I'm actually looking to de-risk a little bit. And so I may end up selling half of my Magic tokens and providing liquidity to this pool here, because I think this could end up being a new model for early stage investments. I mean, just take a look at what we have today where VCs invest in early stage projects. They'll get a few tokens up front, but the lion's share of the tokens are locked up, and in many cases, they get in small increments over time. So if you look at what DeFi Kingdoms model or you look at Cosmic Wizards model, they're basically replicating those VC deals, because you can put up the investment up front by providing liquidity, and in return, you're given a very robust yield paid in the platform's native token. And instead of giving you that token up front, most of it's locked, and that locked portion basically gets vested linearly. So in other words, you're getting a small portion of the tokens at pre-established intervals. I mean, just take a look at what this kid did. He put approximately $3,000 into one of the pools on DeFi Kingdoms, and recently he sold this lock balance, which at the time was valued approximately at $12 million, for $1 million. And if you really think about it, this isn't very different from the deals that the VC folks get. And even in that setting, behind the scenes, vested tokens or locked tokens get sold to other investors all the time. Except in this case, all of it's enforced by smart contracts. And I've stated a few times on Twitter, I think VC is losing their edge, because whether it's NFTs or gamified, anybody around the globe, regardless of their age, or geography can get access to these early stage investments. I mean, if you take the example that I used earlier, this 16-year-old basically got an early stage investment deal. So with that in mind, I decided that when it comes to these GameFi projects, especially ones that I think have potential, or even the ones that I don't think have a lot of potential that may be a long shot that I still want to get exposure to, I think providing liquidity to pools that lock up most of the tokens is probably a pretty good passive investment strategy. And the nice thing is the yield that you're earning is paid in the governance token. And since all the in-game assets are purchasable using the magic token, you could sort of use it like a printing press to buy in-game items. I mean, stuff like this is completely changing the landscape, the investment paradigm. And the thing is, all of this is happening under the radar. Most people are oblivious to it. But given the massive risk reward and the fact that we're super early to this new investment paradigm, personally, I think it's worth the time to do some deep dives and try to find quality with a lot of upside potential. And so what I'm going to do is basically take some of the profits that I make from DeFi Kingdom, and I'm going to sprinkle them in a few high yielding pools for GameFi projects that recently launched. And a nice thing about the space is that due to the risk reward being so goddamn good, you can easily sell a portion of them when there's a speculative premium on the token. And you don't have to take a huge bet. I mean, the kid turned $3,000 into $1 million. And depending on your portfolio size, you could easily put a few $100s in, or whatever amount of money that you're okay losing, and just let it ride indefinitely. Another thing to watch out for is to see if it had a fair launch. It would be ideal to go for projects that have no VC investment. This way you know that later down the line, if the project is successful, that you're not going to be dumped on. And to put yourself in a position to be super successful, I would recommend doing the following things. Number one, make sure to follow a few of the successful projects and thought leaders in the GameFi space. Secondly, definitely check out my Discord. There's a few people in there that are really good at identifying quality opportunities very early. In fact, one of them was talking about DeFi Kingdoms when it was trading roughly less than $1. And lastly, don't just ape into projects because I'm talking about it or some other social media influencers talking about it. In today's landscape, you can easily get into the Discord and assess the quality of the team, the community, because in my opinion, most of the projects that end up winning, number one, are going to have a kick-ass team that ships, and number two, has a cult-like community that's loyal to the project. I mean, part of the reason why I decided to invest big into DeFi Kingdoms was the fact that I saw a lot of enthusiasm within the Discord. I saw community members building third-party applications to help other players. And I even saw a bunch of new YouTubers who were strictly talking about DeFi Kingdoms and nothing else. And I'm not talking about the amateur jabroni YouTuber. I'm talking about quality people who arguably do a better job than I do. So if I were you guys, I would definitely take advantage of that informational asymmetry. Now with that being said, I hope you guys enjoyed today's video. This is CryptoOneStop signing out. I'll talk to you folks next time. Bye.